Candlestick analysis makes it very easy to see which direction the markets are going to be moving. As we saw, after the reversal down here in the Dow, we saw an evening star signal followed by Friday a bearish engulfing signal which closed below the T-line. This gave some good evidence that if the pre-market futures were weak on Monday, today, that more than likely we were going to have a downtrending market or potentially a bearish J-hook pattern. This was more clearly evident in the NASDAQ chart that did a failure with an evening star signal and trading below the T-line back to where the support level was. Also giving the implication that we were in a bearish J-hook pattern. Today it gapped down. Even though it was an indecisive trading day, there was some good profitability being short positions today. Now we have the next criteria that if it did a doji and stochastics are heading down, if the pre-market futures are showing weakness tomorrow, that will have the prospects of doing a bearish doji sandwich, or this day's trading being the same magnitude as this candle right here, further confirming our bearish J-hook pattern or our downside move in the markets. This allows investors to have a much more clear analysis of what's going on in investor sentiment and which directions the market are moving. This also allows us to analyze individual stock charts, that if we think the market has a high probability of heading down, we can analyze or scan for the charts that are rolling over also and have weak chart patterns. That's why we recommended lending tree today as a short if it opens weaker, because that told us that this support level was not holding up and that this downtrending move was now going to be going into wave 3 or much more downside. That same scenario was applied to our short recommendation again on Twitter, because it had a big evening star type signal or an abandoned baby failing at the T-line, that if they opened it lower they were breaching this support level, also going into a bearish wave 3. And because we can easily identify high probability patterns, such a big frypan bottom pattern, we know what the results are. Very strong price moves coming out the other side. So if we can analyze individual commodities or currencies with a very high degree of accuracy, that allows us to position either trading the currency or trading the commodities or the entity itself, or trading stocks that reflect those entities, which allows us to take advantage of price moves like Nugget, the gold miners bull fund, 3 leverage, where we started buying down here, buying calls and taking profits on the way up and rolling into the higher price calls to protect our profits. But as you can see, we started buying down here in the $26 range, and now that it's up here in the $40 to $50 range, obviously that trade was very lucrative, but it was based upon identifying what the underlying entity, gold, was doing to make this move possible. That'll be it. We'll see you in the chat rooms.